Hello everybody, it's me the Boss Hog, and today we're going to have a look at the stocks that I've been buying and selling during the last week, which is week ending the 6th of September 2021. Let's do it. Alright, so a fairly interesting week, started and finished in the red. Primarily finished in the red because of some disappointing job numbers from the US. There was also a manufacturing performance survey from the UK as well that was less than expecting, but still pretty good in my opinion. But it didn't go down too well all the same. There's a lot of worries at the moment in the UK about supply shortages, both from a labour perspective and also materials perspective. So I think they kind of fed into those fears, which I personally think are a bit overdone. I have to say that the job numbers from the US were really disappointing and quite surprisingly poor. From my perspective at least. So yeah, the market didn't really enjoy that. And actually I got it would have been a lot worse for me, except from Genie, one of my mid-sized, more risky holdings, continues to perform quite well. So that kind of put a bit of a floor on the fall on Friday. So across a rolling week, which intersected both August and September, up very slightly there, £95. So nothing to write home about. There are a few trades this week, so you can see there the bought and sold a little bit higher as a result. We'll have a look at those in just a second. Personally, I think I took advantage of a couple of pullbacks across two companies. Continue with adding £160 a day across my two ISAs. Now, in fairness, one of my ISAs is nearly filled up because it had a bonus contribution as well as some money at the start of the financial year. So that will mean for the next 2 or 3 weeks, I'm expecting to see a slight reduction in that. In the UK, you can only have 20,000 in each ISA, so one of those ISAs is nearly full up. And whilst my wife is away with all the banking information at the moment, I'm just going to leave it as is for a couple of weeks until she returns, seeing as I'm a bachelor at the moment, which is awesome. And last but not least, no divvy this week. It was kind of expected. I actually drew a fairly big one for Phoenix, which is an insurance company. They did pay out on the 3rd of September, but as is fairly typical with trading 212, it takes a couple of days to come through. So a bit of a shame not to get that, but it wasn't a huge surprise for me. So broadly speaking, an okay week. Not a ton happening, but as you'll see in a second, I did some dealing just to try and take advantage of some pullbacks. So let's have a look at those next. All right, so in terms of shares I bought here, you can see 3.7k. The main one here is actually AbbVie. This is a company that I flirted with owning beforehand, but never pulled the trigger. And it's because I slightly preferred BMY, which has become my main pharma play. But I am super light on pharma, you know, and when I saw AbbVie fall by 10%, it kind of entered for me like fair value territory, it maybe even slightly underneath. So for me, it was a great entry point, and I decided to sell out of one of my mining stocks primarily to fund that. So a medium-sized holding here, just over 1% of my portfolio with 11.5 shares. I will continue to add into this a little bit, I think. Anything under maybe 112 for me is still a great buying opportunity. You know, at these kind of levels, the yield's over 4%. I think there's still a lot to like about it. And yeah, maybe, you know, having to put the some more consequences of some medicines on the packaging might reduce things slightly, but you know, I think the FDA news and that reaction was a bit overdone from what's actually a fairly good company. So I was quite happy to open a new position in AbbVie. I haven't owned AbbVie beforehand, so that was exciting. BMY, I continue to add. I consider anything under 67.5 BMY quite attractive. So 67.5, it's a really easy buy for me. Forward PE is like 8.5. Yield is solid. Company, I think, is solid. It's still got the Celgene cash cow for another 5 years before generics become a thing. And it continues to diversify. Has a really strong pipeline as well. So I'm not a pharma expert, but I feel really comfortable about BMY as my main pharma play. And for me, it was a good opportunity to pick up another 11.5 shares at 65.47 as an average. So again, I consider that a great buy point. Not really sure why it's not feeling the love. I consider it 20% undervalued probably. I'm probably going to more aggressively start to add to that in the future. Speaking of Poly here, this is a company I've been buying for a little while now, talking about it a fair bit, so I won't go into too much detail, but at 14.43 again, I continue to add to this. I am fairly red on it at the moment, I'm down a couple of percent, but it's got 7% yield, and like I say, I'm happy now with my gold hedge, even after selling out of one of my companies in a second. Poly is my main gold hedge. It's about 4% of my portfolio, and again, I consider 14.5 a fine buy point really for the company. WH Smith here is really interesting. This is one of the first companies I bought when I first started investing. I sold out of this in, I think, February or March at 19.20. And the main reason why I sold out of it is because I felt like all of the good news was already factored in. And even though I think, in a few years' time, when everything is presumably back to normal, WH Smith is like a £24 a share company, which is more or less what it was trading at beforehand, and it's probably now even stronger. I just felt like it was going to take a few years and there was some money I could redeploy elsewhere, which I did. However, since then it's had quite a sharp fallback to sort of £15.5, which I consider, again, like just too much. Now that's actually less than the first time I bought this company, where I was buying it to sort of 16.5 and sold out at 19.2. I'm really happy with that return, 20% odd. And so for me, I'm kind of already reasonably familiar with the due diligence here. I did a little reading before I pulled the trigger. Now I will say that this is reasonably risky. Although it's moving in the right direction, it's heavily impacted by travel. All of its higher margin stuff is in train stations and airports. But actually its national stuff, like, just stuff on the high street, as well as its US chains, performed really well. They're back up to like 85 to 90% of pre-COVID levels. So they're definitely moving in the right direction at the moment, even though the earnings are still pinned back because of that. The revenue's looking much better than the earnings, but again, you have to understand how their business works and where all their higher margin stuff is. So for this one, I haven't gone in quite as heavy as I did with AbbVie, because I want to average into this. So I think you'll see this as a regular buy for the next few weeks. It's also in the ISA that hasn't yet filled up, so the one will be getting money added to it. So I'm expecting to be buying more WH Smith under probably definitely under 16, probably under 16.50 as well, to be honest. And then look for a 19 plus pounds sell price. So that's pretty cool. And last but not least, this is a company I've owned before, which is Khaki. I sold out of this as a mid-sized holding to buy AMD when it was like $73, because that was just too good not to buy it. But I still really like the company. It hasn't really gone anywhere since I sold either. I think I sold out for like 255. I'm buying in for like 256 to 258. And again, like, this is a fairly volatile stock because it doesn't pay a dividend. It has no plans to ever pay a dividend if you read the company website. Fine, but it's a really quality company. It's relatively small, it's less than 10 billion market cap, but it's doing cool stuff with the both military and civil stuff in the US, and it's just got that really nifty like analysis tech side to it as it supports the government. So it's like an interesting play for me between like tech and defense. Definitely more on the tech side. That's where I'm grouping it from my portfolio. But yeah, for me, this is a $290 share price, currently in the 250s. So I'm going to gradually build up a stake here. And also, where I've been buying a lot of like insurance and mining companies, my dividend yield currently is like 4% blended across my portfolio. So again, I'm relatively happy here to not have a dividend yield from this company. It kind of balances out a little bit. And again, I like this as well. I'm a little bit light on tech at the moment, so it's ticking a lot of boxes basically, and any drawback isn't really that much of a drawback for me. So hence, I'm also going to be looking to add to Khaki a bit more seriously, I think, over the next few weeks whilst it's under 260. So, okay, not too many sales, as you'll see in a second, but let's have a look at those as well. All right, so in terms of sales, the main two I just want to highlight, I've got in yellow here. So first one is Sentiment. This is something I'm terming as accidental swing trading. I've owned and sold Sentiment now twice, both times for sort of, modest sort of 3 to 5% returns. Sentiment is like a higher risk gold play. It's still just a single mine company, but that mine is really good quality, and it's also starting to expand into other West African countries in this instance. I consider anything under £1 really good value. So, I mean, it's not like I sold this thinking it was like massively overvalued or anything. I just wanted to free up the money for AbbVie because that's more of a long-term hold for me. And it was just, I just couldn't turn it down. Didn't want to sell too much of anything else either. So yeah, I'm fine. There was like a 1 to 2 week turnaround where I picked up like 2.5% profit. So if you were doing that consistently, you'd be making bank. But obviously that's a very quick turnaround, specifically for AbbVie, and to a lesser degree Khaki and Disney as well. So fine, no regrets. Genie here is one of my more regretted sales. It was a case of like I didn't know what else to sell. I nearly sold like 100 shares in Huntsman. I've got 700. Even after trimming there, you'll see. but I just didn't want to. Now, Genie had a really strong last month, I would say, and it's an interesting journey for this company because a couple of months ago they did a rights issue at $19, and the market hated it. It went from like $24 down to 15, I think. Which was like massively oversold. So I decided here, like, there will almost certainly be further rights issues in the future for such a company, right? It's still in the growth stage. So I just thought to myself, well, I'm 20% up. I'm going to trim some wins here, basically. I will look to add again if it does dip below $17, especially. I do need quite a premium here because I do think this is on the riskier side, but actually it is becoming more of a comfort holding for me. So I might edge that slightly before I decide to average at 17, maybe more like 18. I'm not sure. But yeah, I think this company is in the low 20s. I'm not super comfortable pricing such early stage companies, so take that for what it is. But I think here in the low 20s is a good target. So, I was selling this at like $21, I think, or 20 and a half. Just decided to take some gains. And again, here, this was to free up money actually for BMY. So I consider 65 and a half just too good of an opportunity to build a long-term holding. Whereas Genie, I don't think is a long-term holding. It's like a medium-term holding. But I'm in no rush to sell it either. So maybe slightly regretted, but I'm always happy to take a little bit of profit off the table. So that's the main thing. So yeah. Anyway, that's been my buys and sells this week. Any more questions, feel free to fire them at me. Otherwise, thank you very much for watching. I've been the Boss Hog, and enjoy the rest of your day. Bye for now.